Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Monday, September the 23rd, 2024. Trade today was, for the better part, on a very quiet side. We did see some decent moves early, but the main problem today, in my opinion, was that within the NASDAQ, and within the Mag 7, that was equally divided, where two were kind of moving down heavier, and one was really kind of just moving to the upside and hanging out, staying up there and continuing to gain. So it did produce for chop. And I'm talking within the minute chop, within each few seconds chop. And so it was really not as easy to move around. But starting with the S&P in the futures, I'm on the 4-hour chart. And as you know, I have been walking side by side two views. One is that what I have now still marked out, that the market, the ES and the NASDAQ, remain within minor wave 4. And both, I know the S&P, not the NASDAQ actually, but the S&P, I believe, will get closer to the irregular B levels, and that's 1.236 and 1.382. And thus far, we've gotten to 57.97. So a break above 5,800, I think we can get to. Still not full irregular B, but just the fact that it created a new high puts it into the irregular B category, and that already exists. So I've gone and I've moved it up one little rally. I moved it up to the 3, the 4, leaving that we still had the 5. And again, what I'm noticing in the market is that where we sit and how the other count still remains, but the other count suggests that we're in wave 3 of the minor 5. And so it's 3 of 5, but not only there, but this would be minuet 1 of minor 5. So minor, and if this is going to be 2, or even if it's not 2, the energy to push, the energy to build just isn't there. And so I think what fights it right now, because you think about it, on a macroeconomic basis, the Fed has begun to cut, and they did a decent job in coming in at 50 basis points versus 25 or nothing. So, and actually openly discussed that their plan would remain to do another 50 and then at least a 25, and spacing it out between now and next year. So that's not bad news. And so macroeconomically, maybe the market would want to be purchasing certain things, and that part is showing up, but it's not broad-based. And so to really kind of go within that we're in a third wave as part of a minor 5, going up to reach the high of an intermediate third, that's a tough call. Because in my view, the market should have enough gusto to continue higher, to get up at least to levels that are going to steer clear from this and head towards levels that will be associated with that minor 5th wave. And so I've taken them off, but it's easy enough to run them back. And because I'm leaving on for this particular account, and I will, if I'm going to go over the other one, take it so that we can see additional upside. Right now, under this count, using it, I think we still have upside to complete. But the market's not in any big hurry to go out and do it. And I don't know if they're going to be waiting, if they're going to wait for the, I think we got to look at what we got coming out at the end of this week. PCE, yeah, that's what I thought. So we have PCE on Friday. We have every Fed governor and president, including the chair, out talking this week. So they're talking their plan. So the market should be able to start to factor in, at least on the credit markets and in the treasury markets. They might get a little bit firm on rates and make adjustments up and down. And then still nothing really impressive other than PCE and all these Fed people talking this week. So so today we didn't really have anything except the S&P Flash US, the PMIs, services and manufacturing, didn't really do much. Tomorrow, not much. We have consumer confidence at 10 a.m., new home sales. Thursday, initial jobless claims, durable goods, etc., GDP, second revision, and every Fed in the book is out talking. And then Friday, of course, PCE. So the market may remain calm in kind of a sideways pattern until it gets to take a look at what these numbers are, for whatever their reason is. But right now, I am leaving open the potential that the market is going to finish up this, whatever this is going to be, either 5 or a C wave and the B wave, which would bring it in. But if not, then I have to move it back to where I'm considering that it would be in a wave 2 or possibly going to start a wave 2. And it's going to come down and finish that and then race. But that's the kick. If it's still in a correction, it's got to come down, finish that correction, and then just pick up and go higher. So in other words, the risk on trade has got to be in full force, because that's what is going to continually keep all of the underlying upticking, is the fact that the dealers have to buy the stock because they're selling calls to everybody that's coming in doing that trade. So that'll force the market higher, which is great, much easier to trade. So that's this count, and I'm leaving it here because the market is kind of acting lax. To break above 58, they were okay above 57. They kept it above, and they got as close as they could to 58. And I guess we're still looking for that one person who will take it up over the finish line there, maybe up towards the next finish line. But maybe there's enough people that think, I'm not going to do that because I know this is a turning point. So they're waiting for that turning point versus buying into it. All right, so under the other count, I can just walk it through. This would be ABC, this would be minor 4, this would be wave 1, this would be wave 2, minute 1, minute 2 of that minor 5th wave. And so we've just finished likely, or going to finish, what should end up either being minuet wave 1 of this minute wave 3. Which suggests much, much higher. Okay, so that third wave. If not, then this would be minuet wave 1 of that minute wave 3 of the minor wave 5. I talk it all out. So that being the case, it needs to pick up and go. And I'm not saying that it can't. But when it does, they're pushing into uncharted waters. And I'm not sure that the market and even all the quote unquote investors and other traders are willing to do that just prior to earnings. So let's see. But under that count, it has to go. We have a little bit more time where it can come down, likely to 5,700, maybe even as low as 5,638, and we can call that a wave 2. Now, if this is 1, 2, and then we have another 1, 2, and we have a 3, and it should just go. It's time if they're going to do it. All right, over in the, oh, sorry, I always try to include the moving averages. So here we are with the moving averages. They're not bad. This is the daily S&P. They are in alignment to continue to move higher versus to give it up right now. So with that in mind, again, 1, 2, 3, 4. I know how I've got it labeled, but I could shift that. Well, we got a little bit of a 5, and it still could put a minuet wave 1 up there and have this thing come rolling down in a 2. And then we're still going to have to run both side by side, because either one's got to continue the breakdown or the other one's got to continue to go up. And so we've got levels that each would need to break. But first, we're going to have Still a challenge of, well, was it this or is it that? So then we're going to have to be able to trade. And this is the other thing I want to share with you guys, that what I present is it's just the ability to possibly, now you could think of a very short-term trade, because the market's not just going to drop. It can, but I would not expect it to just drop from up here to down here without some external stimulus happening, something bad. And I think it would have to be geopolitical at this stage. Um, because economically, I think we're pretty steady. I don't see something blowing up underneath the US economy. So in any case, both are still together and they're going to run together as we come off in either a wave two or we continue to go up in that third. All right, I'm going to go over and take a look at the NASDAQ. And NASDAQ, you see, it actually fits a little bit better in the NASDAQ that this is going to turn into a B wave. This is the interesting part as well, seriously, that the NASDAQ looks worse than the S&P. And before, on the way up to its high, to this high, the S&P, excuse me, the S&P seemed to lag the NASDAQ. And now it's kind of the other way around. Building upside momentum just fades so quickly. And then something comes out and they're making an adjustment to one of the Mag 7. And right now it was the Mag 7 that took it all the way up there. And now the questioning of where to price Apple, with Apple 16 hitting the market. Now we got to wait, what are sales going to be? And there's a little bit of volatility in the stock as these expirations come and go. So keeping that all in mind, this is really the market that because I trade it, that I'm like, boy, you guys just are not finding it easy to move at all today. Managed to close with the green bar, great, but nothing. So here, I also am just leaving it with the possibility, and this as it was brought back to my attention by a member of the trade room. And so I want to just give a shout out and a thank you to Christian, because he brought this up in the trade room today, and that's kind of what we're about. In any case, here we have where that the NASDAQ is still involved in the minor fourth wave, and that this is the minute wave A, and then we're still working on minute wave B, and we may, but maybe not, go and break above that high, which at the moment is 20, there we go, back over to it, 21,213. And so that's what would have to break in order for it to be a clean minor 5. But under this count, we would then above that level consider it irregular, even though the 1.236 is way up at 22,000. So you have to think, well, gee, market, do you have enough energy to kind of pop yourself 2,000 points from where you are? And it's like, maybe, right? 2063 to 2207 to 2270. Yeah, can you put on 2,000 points there? I would think it can, but do you see that energy building anywhere? I see it taking it down. But do we see that same type of energy going up? Not yet. We could, but now to this count. So if I'm marking this in ABC, one of the differences is that Christian marked it out as a 1, 2, 3, 4, 5, and that so wave A was 5 waves. So it's a zigzag in terms of the overall wave 4, and that already expected because we knew it had to go below that. So that helps and fits. This is more in that it would be flat, but if the market does not get above there, we still can consider it the zigzag, or we can almost consider it an ABC, and that's the A, and the B got up not all the way. So you kind of just think it can come down somewhere into here versus going much lower. So here's the thing for the C wave. If it goes up and becomes an irregular, then wherever it stops to that low, we're going to be measuring it as if for 1.618 of A. So if it gets up above here, our fib retracement coming back down to 1.618. If we kind of stay within here, then we're going to take the measurement for the C wave based on where this particular B wave ends. So if it ends at 20,007, with this being, then we got about 300, 400 points. Well, from where we were here, 17,005 takes us down to 17,002. So, and I think there's another, 1.618 can bring us down into here. And that's well within the realm of reality for that minor four. So what's just unbelievable, we're still talking about the minor four. I mean, this isn't over yet. We got all this bullish news out and the market's still not doing it. It's like, yeah, right. What does that make you think? How does that make you feel? Do you make you feel like, wow, that it has the potential to do it? Do you want to be long? Are you waiting for something to kind of take off and go? Or are you just focusing more shorter term? Shorter term, there are some trades that you might consider, keeping overnight in a swing trade. But I'm not going beyond that right now because I don't think the market has got it. Maybe it'll show up. Currently, if I'm even leaving it 1, 2, 3, 4, we're inside that fifth to take it higher. And just doing a simple fib. Let me go down to the 4-hour chart. I don't need to sit here on the daily. Sorry about that. So here, the fourth, as it responds to the first, because again, if this is a C wave, it must be 5, and that's exactly what it's doing. So whether I put the 5 there or whether the 5 is yet to come in, it all still fits. I put the 3 here, the 4 there, giving the benefit of the doubt that the NASDAQ will find the strength to get itself above 20,194. I believe that high is 173, and then or 20,203. And to get, to put 400 points into it, or actually a little bit more, get closer to the 719. That from here would be a very strong rally, and maybe a couple days. So that would ignite the fire and give us all the thought, okay, we finally have some energy, but we have a lot of resistance still, a lot of proving before much higher. So 22,000 could be in its sight somewhere, but is it going to be able to do it? Another question. Right now, the trade is not necessarily favoring that. And I'll tell you, in terms of how things are weighted in the index and the price of the index. So that's not suggesting that Apple at some point won't go to 150, won't go to 175, won't go to whatever the markers are. I would say never to nothing. So yes, I think eventually the NASDAQ does get above 22,000, but I think it probably comes in intermediate wave 5, not minor wave 5. 22, 23,000, 24,000 in an intermediate wave 5, sure. But by then, some of the problems have been figured out. There, a lot of the political back and forth will have been solved. We'll all know. So what to expect as well. So in any case, this still would mean that we come down. Now, I'm just going to run it as if let's just say it gets to there. And I'm putting on a drawing. I'm going to put on this. I'm going to drop that down to there, and I'm going to take it up to there. Equality, right? Because it's not irregular. So the number one for a C wave in an ABC is that it's equal to wave A, and that's at 17,077. So a wild drop would definitely throw the market in back to negative gamma, would definitely shake it all up, and I hate to say it, but produce a cleaner rally. Shake it out, get it, okay, everybody settle whatever you need to settle, and now start over. Where do you want to put your money? I think that because it's going to be being flipped around. And so it's got to be where commitment, and then we build on those types of things. But so the money is going to flow around, and we might get that. In fact, I think the whole C wave could be like that. So there's that under this particular view, which that's why that's still there. And this count, if it stops there, so it's got to go up still, quite a nice little jaunt, and then drop. That would be on the minor four still engaged. Mind you, when minor four is complete, if it isn't now, when it does become complete down here, then the object would be ding, 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 ding in a minor five. And that what I would expect gets us through the end of the year and into 2025. All right. So the other side of this coin, let me go back out to the daily, is that this is ABC minor four. 1, 2, 1 of 3, 2 of 3. So we still have the potential to finish a second wave. This would be the other side. I'm not going to leave these up because it'll just become very confusing. I'll bring it down to here. So here we are, that this is wave 1 of the minuet wave 3. So we have 1, 2, and we're into 3. Maybe that 1, and then 2 is still in effect. That's 1 here. This is A, B, and we're going to do a C wave. What this was, they do that a lot. Build to the upside and then just do nothing, fail, and sit and make noise rather than a pattern. Okay, so where could wave 2 come to? Well, we have 19,817, 19,580, we'll call it, 19,386, and the possibility of 19,190. Backdoor, that could go that far. And then rally all over again. But wave 2 in something that is going to be labeled as a third wave, I would not expecting wave 2 of 3 to start retracing more than 62, basically not even more than 50%. 3A2 would be plenty for the market to flip and go cough and end up here and then turn and rally and end up here or here. So the other, not this one. So that level does not exist on the other count. So there's no resistance there. There's no fib resistance. That resistance comes from here. We would have 1, 2, and we'd be looking for a third wave that undoubtedly would take us much higher. And you're going to see why I think that the market would need to. There's 1, there's 2, there's 3. That's just for a third wave. So we would be 1, 2, we would be in minuet wave 3. And if I bring it all the way back down, oops, all the way back down. So we're within minuet wave 3, and it's wave 1, and this is 2, and that's 1 of 3, 2 of 3. We're in a 3 of 3. 1 of 3, 2 of 3. That's on the hourly chart. Well, what was this? So you begin to wonder, it's like, okay, so it's still within coming down and finishing a second wave. Look how much room it's got. So we're going to do one of these, or we're going to do another one of these, but it's going to happen overnight. It will come in and they'll have filled in the blanks. It's like, oh, gee, thanks, but trading it both ways is always fun. But it can. And then we label it a wave 2. And what the deal would be, A, B, 1, 2, 3, 4, 5. Here into the sum down here, possibly. It's quick and sweet, quick, sweet and quick. Those can be fun to trade. And if you get them right away in the opening, and it really is not disjointed, that the entire index is getting sold. These are just baskets of sell that index, sell those 100 stocks. And Because if you got one or two that are going in one direction that are in the top 7, and then one or two of that same top 7 are going in the other direction, it becomes a battleground. And you get a cursor that goes like this. And I'm not kidding. You know, they just sit and bounce. So that's that. And again, if it's in the more bullish, we can allow it, but it still needs to go one way or the other. Let's put it that way. One way or the other. If it's going to go down to finish a wave 2, make it quick, sweet, and easy. Give me an hour or 3 of that. No, that could work. We might have to wait because we got to wait for numbers, and tomorrow there aren't any that are going to do that kind of movement. And actually Wednesday there aren't any. It's going to be terrible if we just kept a little around for forever. Thursday it might, but maybe not. I don't know. That's going to be it now. But I'm telling you, if it does it, and it does it fast, and it's sweet, and you can see that there are markers that are getting bought. So in other words, we know that the algorithms have got that one locked in somewhere as a support level. And usually it's a fib. Doesn't mean it can't be broken and drives it to the next fib, but you'll get bounces. You'll get bounces at Fibonacci levels. If this is the 2 here and this is 1, 2, then it's got to friggin' go. I mean, just go. And it hasn't. And it needs to get above here. And keep going. And keep going. And so what's going to drive it? Who knows? All right, so basically just bringing this back out to the 4-hour chart, and I'm going to take all this other stuff off. We do have that. I'll leave that up there, and I'll leave that one up there. So that's kind of the marker. This one I think I can take down. And this would be for downside. All right, next update, Tuesday, September the 24th.